All right, let's crack open a study guide that's going to make all those complicated financial terms, well, simple enough for anyone to understand. Ready to get that big fancy brain? Let's do this.
Look, let's be real. We're all pretty smart, right? But financial jargon can feel like a totally different language. The goal here is simple: to finally master those smart words so you can understand what's going on and, maybe sound like a total pro at your next dinner party.
So here's our game plan. This is our little study guide. We're going to start with the basics, your own personal finances. Then we'll get into investing, learn how to read the market's mood, touch on some pretty clever strategies, and then we'll wrap it all up with the big global picture.
Okay, let's dive right into Chapter 1, your personal banana hoard. This is ground zero. It's all about getting a handle on what you actually own versus what you owe.
First term up, asset. It's actually super simple. An asset is just any valuable thing you own. Could be something small like your phone, or a bigger investment like stocks in a company or even the house you live in. If it has value and it's yours, it's an asset.
And of course, on the flip side, we've got liabilities. These are just your debts, anything you owe to someone else. Think of your car loan, student loans, or that credit card bill from maybe buying a few too many bananas online late at night.
So how do you put those two together to see where you really stand? You calculate your net worth. This is probably the most important number for your personal finances. You just take the total value of your assets and subtract your total liabilities. So in this case, $500,000 in assets minus $300,000 in liabilities leaves you with a net worth of $200,000. That's your true financial snapshot.
And of course, day to day, we've got the flow of currency. We'll just call them leaves. Your income is all the leaves you make. Your expenses are all the leaves you spend. And capital, that's the special pile of leaves you set aside to start a business or make an investment. Simple.
Okay, Chapter 2. Now that you've got your personal hoard all sorted out, how do you make those leaves start working for you? Well, let's talk about investing and owning a piece of the action.
So what exactly is a stock? It's just a tiny, tiny piece of a company. When you buy a stock in, say, the banana company, you don't suddenly become the new CEO, but you do officially become a part owner of that business.
And owning that stock comes with some pretty cool perks. First, you have equity. That's just your slice of the ownership pie. Now, if the company does really well, they might share some of their profits with you. That's called the dividend. And your yield? That's just a fancy way of measuring your annual return from those dividends. It's your reward for being a part owner.
Now, this next one is maybe the most important rule in the entire jungle: diversification. You've heard it before. Don't put all your eggs, or in this case, all your leaves, in one basket. Because hey, if the banana market has a really bad year, you'll be pretty happy you also invested in coconuts and apples.
All right, time for Chapter 3. We know what to invest in, but the whole market has a mood. It can be happy, it can be sad. So how do you read the jungle market? This is where we learn to spot a bull or a bear. A bull market, this is when everyone's feeling great. Prices are rising, the vibe is optimistic, and everybody feels like they're making money. Monkeys are confident, and they're investing more and more leaves.
And then there's the bear market. It's the exact opposite. Prices are falling, everyone is pessimistic, and the general feeling is that the party is definitely over. As they say in the jungle, the vine is dead.
So yeah, it really comes down to those two big moods, those major market swings. You've got the optimistic bull, always pushing prices up, and the pessimistic bear, dragging them back down. It's all about the psychology of the crowd.
Okay, you're going to hear this term market cap thrown around a lot. Don't worry, it sounds complicated, but it's just super simple multiplication. You take the total number of a company's shares and multiply it by the price of one share. That number is the market cap, the total value of the company on the stock market. That's it.
Ready to level up? Welcome to Chapter 4. We're now getting into some of the more advanced strategies, the clever ways that smart monkeys navigate the jungle to make money in some pretty surprising ways. First, let's cover the absolute basics of any investment. Did you make money or lose money? Well, if you buy a banana and sell it for more than you paid, that extra profit is your capital gain. If you end up selling it for less than you paid, well, that's a capital loss. Simple as that. All right, get ready for a real mind bender. It's called shorting. It's a way to actually make money when a price goes down. Here's how it works. You borrow something, say 10 bananas, and you immediately sell them at today's high price. Then you wait for the price to fall. Once it's cheap, you buy the same 10 bananas back, return them to your friend, and you get to keep the difference. It's a wild, high-risk move where you're literally betting on failure.
Think of hedging like buying insurance for your investments. Let's say you're all in on bananas. A smart move might be to also buy some coconut stocks as a hedge. That way, if some banana-specific disaster happens, like a big storm, your coconut investment helps protect you from losing everything.
Okay, for our final chapter, let's zoom way out. Chapter 5 is all about the big picture ideas that explain how the entire global jungle economy is connected.
Here are 4 huge ideas, but we're going to make them super simple. Globalization? That's just how all the monkeys in all the different jungles are connected by trading. Monopoly? That's when one single company gets control of all the bananas. A subsidy? That's when the government steps in with some extra leaves to make bananas cheaper for everybody. An arbitrage? That's the clever trick of buying bananas where they're cheap and selling them where they're expensive.
And just like that, you did it! You've officially graduated. You've gone from the basics of your own bank account all the way to global economics. You're now totally equipped with the language to understand the financial world and, yeah, to sound really, really smart at that next dinner party.
So we have to leave you with one big question to chew on. Now that you've got all these smart words and you understand assets, markets, and all these strategies, what are you going to do with your bananas?